That sea of SPACs, well, they continued. But coming off the busiest week in almost two decades, and now China's cybersecurity crackdown, well, it's giving investors some serious pause when it comes to owning hot new issues like ride-hailing giant Didi. We're now joined by Kathleen Smith. She joins us now. She's chairman and co-founder of Renaissance Capital. And Didi is set to enter the Renaissance Capital IPO ETF tomorrow. Kathleen, thank you for being here.
Thank you.
So I got to ask you, how are you feeling about the ripple effects on the U.S. IPO market?
Well, we kind of like to see a little bit of fear in the IPO market. It helps pricing to be more reasonable, and it may be a little harder for issuers to come out, but it's good for investors when there is more fear than not. And we have had a very robust IPO market, and prices have run up. And so this will cause new companies, when they come out, to be a lot more careful about how they price their IPOs and how they move forward. I also think we will see less Chinese IPOs in the future, and certainly in the U.S. market. So perhaps there'll be a premium on owning some of these Chinese IPOs in Hong Kong or wherever. But we do think that it's going to slow down the very active issuance of some Chinese companies, Didi being the largest Chinese IPO of the year, raising $4.4 billion. That will be a part of our U.S. ETF. It's going to be, we have 70 names. They'll be in the middle of the pack there. And fortunately, a lot of price discovery has happened already, so it will be part of a portfolio of 70 other stocks. And when people get comfortable again with Didi, hopefully we will benefit from that.
You know, Kathleen, before we switch back over to the gentleman, I got to ask you one quick question. The largest holding in your ETF is Snowflake, up big today. It's also probably the best performer in your holdings. What's your take on cloud computing, cybersecurity, as we look at that big hack today?
Well, this has been a very good space. We also own Cloudflare and many other cyber-related security companies. So it's just a big space. There's a lot of opportunity. Investors are looking for growth. You know, the benefit of owning this name and others like it is you're not going to see these names readily. You have to really look to find them in other major indices. So here's a way to get exposure to some of the newest technologies and new business ideas out of this ETF.
All right, Dave, tease it up right for you. You've been looking at that growth versus value trade. What are your thoughts here?
One is a rational IPO market. It actually does nobody any favors when the sort of default for an IPO is it doubles on the first day and then trades with a lot of volatility. We're hoping to use IPOs to actually generate capital to fund growth companies. That's kind of the point of going public. You know, as far as where Didi fits in here, you know, I think it's worth pointing out that this is really part of that cybersecurity story in a way, right? This is really about China cracking down on how data is managed by Chinese companies, obviously with a bit of a command and a control bent. So yeah, Didi is a bit under the thumb, if you will, but I think we need to be cautious of a lot of the Chinese internet companies that are similarly going to be under the thumb. And that's going to show up in how they can access public markets, but it's also going to show up in how they run their businesses. We've seen that with Alibaba as well. So I think it's worth a little caution here. I don't think any of these companies are just going to go away. I don't think they'll do anything that dramatic. I think these are wrist slaps from China that will result in these companies coming a little more under the fold of the Chinese Communist Party.
All right, Didi shares down more than 4% today.